why is position sizing often considered more important than stop losses in risk management for a number of people? Now, from my end, I remember I could not really get this in my in my noggin until I lost a bunch of money trading. And for me, the size of the position for me, the stop loss was there, and I thought to myself, okay, I'm protected. I'm going to put this amount. I'm going to be protected, and I don't have to worry about anything. But
Mhm.
then sometimes things happen and your trade doesn't get executed the way that you thought, or maybe you miscalculated something inside of your account, or something might occur, and then a larger loss happened in my account than I actually realized. Whereas if I make sure that the size of the position is managed at the beginning, that amount, if something went horrifically wrong and it was gone, I would still be fine. Um, uh, then it changed everything for me, even to the point where I go, that account, whatever is in that account, is at risk because it's in that account. And so also there, I make sure that whatever cash I have within a brokerage account, a crypto account, whatever, is what I'm okay with losing. So I sort of like spread my stuff around so that no one catastrophe can never really hurt me. How do you think about risk, position sizing and risk management in this way?
Yeah, same way. I think that position sizing often ends up being a more important variable than stop losses. Oftentimes, stop losses are seen as, sort of a tried and true method to make sure that you are consistently taking losses quickly, so that the risk reward proposition is set up properly with your trade. But one of the things that doesn't take into account is it depends on what kind of volatility you measure to determine those take profit and stop loss levels. What I see a lot is people have a limited window to build their model from, or build their trading strategy from. And if you're building your trading strategy, let's say prior to this week, when volatility was at 11 or 12 on the VIX, and the size of ATR is relatively small, and you've got these really tight stops as a result, your take profits fair, it feels like, oh no, I'm building my take profit and my stop loss relative to the size of the candles, right? But then we have a volatility event and the size of those candles goes up significantly. We have, shakes in the market. What was it yesterday? The NASDAQ was down 3.5%. That's a pretty
That's
big
right.
sell off day. And that's going to be larger than the candles you might be anticipating. So you're just going to hit your stops over and over and over again. Position size ends up trying to account for some of that risk a little bit differently, where instead of worrying too much about the stop, which could be a little bit wider and start to account for some of that volatility, at least if I lose, I'm not going to lose as much money. And since this is a survival game more than anything, you're just trying to keep profits. Position sizing allows you to stay in the game longer. We don't want to give up money quickly. We want to gain money slowly, and we want to lose money slowly so that we have some control over that risk and we don't blow out our accounts in an instant.
Even for people like me who take completely unreasonable trades, because I just swing for the fences. You can swing for the fences if you blow out your account. And so at the end of the day, like, the game is how not to lose money, which
Sure.
is so opposite to how everyone how people are pushed when they first start trading. They think, how much money can I make? No, you got to be there so that when the hand is dealt, that you can actually participate in whatever is going on.
Yeah.
The um for what was it? Before, I used to, whenever I had a loss in a position, I would double that position. And the next time I went in order to regain what I lost, and I mean, is there a quicker way to the poorhouse than that? Just doubling, 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 doubling. Whereas when I started having my positions, I had a failed trade. I go back in the trade and I have the position, and I continue having the position. I think to myself, there's no way this could be helpful. But then the position gets to a point where it's stable, and then I leave it for a period of time, a week, 2 weeks, 3 weeks, and now it actually built back up, and it had some time in order to move, and
Yep.
then maybe now I'm back up to where it was before. But to me, it was so counterintuitive that the size of my position was what was killing me.
Yeah. I think that's a great observation. I've had a similar one as well. I think at a high level, it also helped me understand how your drawdown plays a role. And one of the things that I think is overlooked is that losses are more disastrous to your account than gains are beneficial, right? If I have a 10% drawdown in my account, it's survivable. It's going to take about 11% to get back to where I was in terms of break even. But if I lose 50% of my account, it's going to require 100% return in order to get back to where I was at break even. And this is an exponential relationship. So if I lose 90% of my account, it's going to take 1,000% return in order to get back to where I was when I started. So that drawdown factor is a really big factor. Trying to prevent losses, I think, is significantly more important than worrying about your gains for too long. If we can control that risk of downside more, then it's easier to overcome drawdowns, as long as our drawdowns are in that, 10, 15% category. It gets a little bit tougher at 20, 25%. But if you know that the volatility of the asset you're trading has significant upside, maybe you're comfortable taking that kind of drawdown. Just recognize that it just gets harder and harder the more you allow your account to draw down.
Every few weeks, I'll go on Reddit and just watch the people's posts who failed miserably because they oversized their position or they got overconfident or whatever, just to remind myself, just to breathe in and remind myself of the suffering that I had gone through so that I never forget. Because every once in a while, you're like, oh, I'm doing pretty well. Let me just go ahead and adjust my settings, adjust my strategy, adjust my position. I can take a little bit more risks. I'm smarter now. Just absolutely get ruined, get completely wrecked.
We see it a lot, and we talk about it all the time, right? The difference between gamblers and traders. So
Okay.
if you're gambling, that's how it's going to show up.